What's going on, everybody? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you which stocks I'm watching going into the week ahead, as well as how I feel about the market conditions. So if you get any value out of that, please remember to click the like and subscribe button. Let's jump right in. Okay, so the first thing we're going to start off with is the market conditions, and we're going to start by looking at the NASDAQ, the S&P 500, and the Dow Jones. And as you can see from the NASDAQ, we have hit a bit of resistance right here. I've drawn a trend line between these high points, and as you can see, we have consecutively lower highs in the price chart, and then on Friday, we had a major sell-off. If you look at the S&P 500, it looks almost identical. You can see 3 consecutively lower highs, and it basically looks like we're trading in a channel with, again, a big red day on Friday, and the Dow Jones here, a huge red day on Friday, and again, 3 consecutively lower highs, trading in somewhat of a channel. So we've got the market's kind of trading all together and all in the same direction, and Friday was an awful day, mostly because of one man, and his name is Jerome Powell. Now, Jerome Powell is the chairman of the Federal Reserve, and the Federal Reserve determines interest rates. Interest rates affect everything from your mortgage to your credit card rates to the amount it costs to borrow money to buy a business. It affects pretty much everything, and interest rates are going up right now. They're going up so that inflation can come down. When interest rates go up, it slows down the economy, it basically shrinks the economic activity that is taking place, and that usually brings down inflation. Currently, inflation is around 7, 8, or 9%, depending on where you live, and that is not very good. That is extremely high, and so to combat high inflation, Jerome Powell is increasing interest rates to slow the economy down. Now, on Friday, he had basically a meeting at Jackson Hole where he did a short little speech, and he gave out a couple of one-liners that really hit the market hard, and this is why everything sold off. He said that reducing inflation is likely to require a sustained period of below-trend growth. Basically, higher interest rates means it's more expensive to borrow money, so these businesses that are borrowing money to expand are not going to be able to expand as fast, and that means that we're going to see below-trend growth. He also stated that restoring price stability will likely require maintaining a restrictive policy stance for some time. Basically, higher interest rates for the foreseeable future. That's what he's saying in that sentence there. And then he says the historical record cautions strongly against prematurely loosening policy. In this sentence, he's basically saying that we don't want to take our foot off the gas too soon and let inflation creep back up, because it means we're just going to prolong this problem. So he's trying to manage inflation. Unfortunately for the rest of us, it means that borrowing money in any way at all is going to cost a lot more money. Now, why is this going to hurt us? Well, it's going to hurt us because the impact of higher interest rates to slow inflation makes it more expensive to borrow money, it slows down the growth of the economy, and it means that regular people have less cash to spend on goods and services. Think about it. If you have a mortgage and all of a sudden the interest rate on your mortgage goes up and you have to pay more per month, that means that you no longer have that basically $600 of expendable cash. You might only have $300 of expendable cash each and every month, and that means that you're buying less Apple products, less Samsung products, and it means that their revenue is coming down, and it means that their stocks, by chance, possibly, if everything works out, could come down as well. So the interest rate situation in North America, Canada's pretty much the same thing, but the interest rate situation in North America is basically like putting a dog collar on the economy right now and kind of holding it back, and it's to bring down inflation. So it's kind of like one pain or the other. Do you want inflation or do you want high interest rates? Because you can't have the best of both worlds, at least right now. Now, when it comes to cryptocurrency, Bitcoin is also in the toilet, so it's not a great week. As you can see, we are basically just stepping down right now after what seemed like a very positive trend here that was starting to build some momentum. We went from basically 19,000 here up to 24,000, which is actually a really nice move. $5,000 on 19,000 is like 25% move. Really, really nice. However, we're back down to $20,000 right now. Looks like we could be finding some support around that round number, but we'll have to see what happens. As of right now, we're in a very bearish trend. Okay, now when it comes to earnings this week, we got a couple of different things going on. We got Best Buy coming out, we got CrowdStrike and ChargePoint all on Tuesday. We got MongoDB on Wednesday after the close. We got Lululemon on Thursday, and a couple of other companies in here. Not too many of them I follow closely. I do like Brown-Forman and a couple of others here, BMO. a couple of good companies here reporting this week, so it should be an exciting week. Now, there are some other events that are upcoming in the next few weeks. For instance, the next interest rate decisions in Canada and the United States will be made on September 7th and September 21st. These usually happen, I believe it's every 6 weeks, I think is the time frame on these. And then the inflation numbers for August. These are going to be really important numbers because if inflation goes back up, that means that the Federal Reserve is going to have to increase interest rates faster. But if they continue to fall down, it means we're getting closer to the end, which would be very nice. So these numbers in Canada come out on September 20th, and in the USA, they come out on September 13th. So I'm going to be watching those very, very closely because they'll probably give us a good idea of what the next interest rates could look like. Okay, now when it comes to stocks to watch this week, the first thing I want to point out is actually an ETF. It is an inverse real estate ETF that is 3 times leverage. What that means is that when real estate goes up, this goes down. But when real estate goes down, this goes up. And because it's 3 times leverage, it means it goes up by 3 times the amount that it goes down. That happens both ways though, so make sure you keep that in mind. Now the reason I like this is because if interest rates continue to rise, the demand for real estate and people's ability to buy more expensive real estate is going to decline. And if demand declines, it means that prices are likely to fall. So it could be a good opportunity for people to make some money on the decline of real estate. This is how I would do it. I would buy an ETF like this because when real estate goes down, this will go up. You can see that on Friday there, it had a major green day as everything else had a major red day. So that's the idea behind the inverse ETF. And I do think that increased interest rates over the long period of time and a decline in the value of real estate, this would be a good option. Now, this is kind of a short-term play. This isn't something you would want to hold over a multiple year time period, but it is something you may want to hold over a couple of weeks or a couple of months. Okay, now the next one here is another ETF. It is the ProShares Ultrapro Short 3X. This one tracks the NASDAQ 100, and again, it is a 3X leveraged inverse ETF. So when the NASDAQ 100 drops by 3%, this will actually go up by 9%. As you can see, on Friday, it had a beautiful green day as the NASDAQ sold off. And so this is a great way to short the market without taking on the unlimited risk. And it's an ETF, so it's not going to move crazy dramatically overnight. It's never going to move by 50% or 100% overnight. So you can kind of eliminate some of your risk. And if you think that in the short term, particularly like next 2 weeks here, that the market is going to continue to pull back, especially in tech, this could be a great way to make some money on that pullback. This is good for short-term trading, is not good for long-term trading just because of the way that it gets this leveraged. It will degrade over time. If you don't know what I mean by that, just take a quick little Google search and you'll understand it a little bit better. Now, when it comes to individual stocks that I'm looking at, I like SnowFlake right now. This is a company that's actually up by almost 100% in the last few months here, but it's still down by 50% since the highs of 405. Currently trading at 197. They just had a great quarter. They gapped up above previous resistance. They're trading in a bullish channel right now. We have increased volume and the MACD looks great. Everything is positive about this company. I'm going to do some more content on it this week. So if you want to see that video, definitely click the subscribe button. I'm going to share all of my research and due diligence with you totally free. But I like SnowFlake right now. We're going to deep dive into it further though. Okay, 2 more companies I want to share with you. One of them is Red Light Holland right here. This company is in psychedelics and they are breaking out right now. Pretty crazy. They went to a high of 70 cents and it has just been a very straight direction for Red Light Holland over the last few months, basically year here. But in the last kind of month to a few weeks here, they're starting to break out and move higher. I do think they have good support around 7 cents. They had some previous support back a little bit further back here, and the entire psychedelic index is starting to move higher. You can buy an ETF for the entire psychedelic industry, and it's starting to move higher right now, which is really nice to see. And so it could be a good sign of a turnaround. If you are interested in the psychedelic space, this would be one of the companies that I would definitely consider. I would do some research on the management team though. That's probably my one concern with them is management team and experience. Now, last company I want to share with you here is a little penny stock. They're called Clean Seed Capital. They've invented a new machine for how to seed farms. Now, the reason this is coming up for me is because water is in short supply right now. There's droughts everywhere and food is becoming more and more expensive, which means agriculture is probably going to be a pretty large focus over the next little while. Clean Seed Capital has an invention that helps farmers produce and enhance their yields and produce more crops. I do think it's a cool technology. I am interested to see how sales are going. I think we're going to get some data about that over the next few months. But the reason I'm pointing it out is because they found some strong support around 14 cents. Currently trading at 15.5 cents right now. I think there could be some support again at 14 cents, and it's a pretty cheap valuation for what the company says that they should be able to do. So definitely something to put on your radar. We are not going to buy into this until we see confirmation of support and a rebound, but it is something that I am watching closely. Now, if you're interested in some free money, there's a couple of links down below that will give you free money if you want to open a stock account or a crypto account, or if you're interested in learning a little bit more about how to trade and invest and analyze charts. I have a full course on there. It's hosted on Skillshare. The link is in the description down below, and you get 1 month of free access to the entire Skillshare platform when you use that link. You can take my stock market fundamentals course. It is 10 hours long. There's over 12,000 students, over 400 reviews, and over 2 million minutes of watch time on the course. It's hosted on Skillshare, like I said. Link is down below. It's totally free. And I promise you, it'll be well worth your time and effort. It will walk you through how to analyze the charts like this, how to find stocks, and how to build a portfolio. So I definitely recommend checking it out. And thank you guys so much for watching till the end of my video. I sincerely appreciate it, and we'll see you in the next one. Good luck trading, good luck investing, and I'll talk to you soon.